All right, good morning, everyone. It's fired up. All right. Last night's session, U.S. markets was kind of a bit of a non-event. I mean, we actually did trade down relatively consistently toward the end of the session, and then we had a sharp bounce back up toward a flat line, and then a sharp pullback right at the very end. So a bit of a wobble there right at the very end. I'm not really sure what that was about, but yeah, I mean, not a ton of leadership on the session. We did have oil prices trading up. Some of the stocks in the energy sector, I think, were maybe holding certain pieces of the market up at a couple of the high flyers out of the tech space that were under a little bit of pressure. So we read a lot of commentary last night on Twitter. A lot of the guys saying that some of the tech stocks are starting to lose momentum and maybe going into some of the downtrends. So that's maybe a little bit worrying for the market breadth overall. I think that especially because some of the high flyers have been some of the big leaders in the market. So that could be one thing to really take note of. Oil price pretty much giving up most of yesterday's gains already on the session this morning. So, I'm not sure how much of the sustainability that we're going to be able to get out of that. I mean, in the big picture, when we're seeing oil move around by 3% at the moment, it's just not that much of a move. 3% move is $1.50 or whatever it is. It's just not a big move in prices at the moment. So I think until we really see a protracted move, until we start to see mid-60 handles or something like that on the oil price, I think a lot of it's just noise. And unless there's a big change to OPEC or unless there's some other sustainable event that occurs, then I think that most of these couple percent moves are really noise in the big picture. All right, if you look at Asia overnight, we once again had China rally. Again, China came out this morning with soft CPI, PPI numbers. I believe that the market's continuing to believe that it's in the camp of there's going to have to be some sort of loosening there. I mean, if you see what those types of numbers are, they're rapidly moving toward deflation, and I think especially in China's case, that could be really worrying. I think the data out of China continues to sing the same song, that there are big problems there, big structural problems there, and that means bad things for our commodity stocks. So I still believe that until something changes there, the rallies in these commodity stocks are probably still to be sold. A lot of them are still in bigger picture downtrends. So that's my opinion. The rest of the Asian market was down a scrap, mostly a 0.25%, that type of thing. I thought that the rally in the mining stocks yesterday in Europe was a real surprise. I mean, you had Europe under huge pressure, DAX down, at 2% at one point. The FTSE was down almost 0.5% for about the entire day. Meanwhile, you had Anglo's up 3.3%, Billiton's up 2.5%, Rio up 2.2%, Glencore up almost 4%. I mean, those are some big moves. And one of the things that I noticed yesterday in the States as well, or not in this yesterday, but I'm just looking at some of the charts yesterday, is throughout the beginning of the year, the cyclicals have hugely outperformed the consumer discretionary and other types of stocks. So, is it maybe just a bit of a decade bounce recovery after these things have been beat down so hard? Maybe it has to do with this push up in the oil price that we've seen off the bottom, and that some of the shorts are getting squeezed out, or that some of the guys are trying to bottom pick. But I mean, the data doesn't really look like it's there to support outside of the States. So I think that's going to be an interesting data set to follow. All right, charts of interest. I had a big epiphany last night when I was looking at things. I've personally started shorting gold stocks a couple sessions ago. I've kind of been a perma bull on gold stocks just because they haven't been making any money in forever, and that's with gold prices essentially running over the last 10 years. And obviously they've got, especially South Africa, gold stocks have all the labor issues, power issues, whatever else to go along with it. one of the most interesting things I read last night was on the Pension Partners blog that Charlie Bilello wrote an interesting piece. And it was kind of on the back of something that Jeff Gundlach, who's kind of one of the most respected guys, I think, in markets at the moment. They call him the Baden King currently. He made some mention about gold and all of a sudden becoming attractive because of the world yields at the moment. So I've kind of always looked at gold in terms of dollars and the fact that U.S. in the States that we're actually moving toward an interest rate hikes was going to be bearish for gold. Well, we've actually seen spot gold come off. We saw it come off aggressively a couple sessions ago because of the non-farm payrolls on Friday. But what we have to actually think about here, and this is making me change my opinion a bit, is the fact that you've got European yields at all-time lows. I mean, the German 10-year yield as we sit is at 0.35%. The 5-year yields, I believe, went negative the other day. Swiss 5-year yields are negative. Japanese 5-year yields have been teetering in and out of negative territory. You got to think about that. So you're going to warehouse money for 5 years, and you're going to pay someone to keep it. That is, to me, was quite a profound awareness for me that, and I knew that all those things were happening. It just wasn't really putting the pieces together. All of a sudden gold paying zero yield it becomes the high yielding asset. And that is something that I think is going to make gold attractive again, especially with everyone chopping rates down to zero, the kind of currency wars that we're seeing here, globally. So, I'm probably going to start to come in today and really look to cover some of my gold stocks. I mean, I know Harmony, yesterday had really poor numbers and supply issues there, and I think it can probably come lower. I still think that all the stocks may underperform the gold price, but I'm worried that in this kind of low yield environment that the gold price could really take off. So just be aware that that's out there, and that could be a situation that's there. All right, Kumba Iron Ore out this morning. Headline earnings per share, more or less right in line with its guidance. Revenue looking a touch light from there. Divi definitely light from what I think consensus expectations are. That's a Bloomberg expectation. It's probably a little bit stale, but I think still definitely light on the div. I don't know if the market's going to really like that so much. We've got Coca-Cola and Caremark out before the market in the States today. Market data, like I said, out of the CPI and PPI numbers out in China, both of them coming in very soft. We're moving hard into a deflationary cycle right now into China. I don't know how they're going to stop this. They've been trying to loosen things there, but the interbank lending rates haven't even been falling, so they've really got a big problem there. We've got South African unemployment. We've got industrial production out of the UK, manufacturing production out of the UK, and then manufacturing production here locally. All right, I want to keep it short on the maps this morning. I just couldn't find that much quality to show you guys, so I'm just going to stick with a couple themes. We had a huge reversal out of Tiger Brands yesterday on the back of a Porsche trading statement. I think there is some support down here around, what level is that, 345. One of the things that to me has been standing out is that, these companies are coming out with these really poor trading statements. I mean, they've been coming over and over. Yesterday, Sibanye managed to freaking rally really hard out of that. You had Vodacom, which came out last week and managed to rally really hard out of that. You had, Harmony yesterday. It actually rallied in our session a little bit into the close. We've seen lots of poor breweries a few weeks ago, and lots of these poor trading statements, but the stocks give us like a one-day or half-a-day sell-off, and then they usually seem to kind of, find the footing and turn around, which I think is just purely a fact of where we are in markets right now, in bull markets, and none of all these guys, these funds are probably underweight, and they just can't actually come and sell anything. So, there maybe is a little bit of sector rotation on the back of it, but there's not a true dump of the stock when these bad numbers come out. So I don't know if this thing's going to have any follow through, but if it does get down to about 345, I think it's got real support. CFR yesterday closed up about 40 cents in the auction to get above our 100 Rand level, which is where we were pegging the top end of the shoulder. So we've broken out from that. I'm short of this thing as we speak. I'm going to be probably looking to close it today. If we don't get a reversal, kind of right from the beginning above 100 here, I'm a little bit more concerned. It was looking very head and shoulderish, but now I'm starting to get a little bit worried. MTN, what I wanted to show here, this is the last one I'm going to show on the day, is, move out to a 2-year chart, and you can really see here, so we've officially, I would say, broken out of this downtrend. Now, this is actually a hell of a downtrend when you look in the scope of things. So, I mean, we've been in this long-term uptrend. We broke out of the uptrend quite a while ago. But now we definitely, without a shadow of a doubt, have popped up out of this downtrend, and I think that we can tack more on here. I think a lot of the guys, the soft holders, the guys that were just bobbing around in this thing, are out of it. I think that they've climbed out, and I think that there's probably more downside to come. So that's it for today, guys. More upside to come. That's it for today, guys. Thanks a lot.